Welcome, I'm Catherine Magana here with Steve Wolf, Rachel Ivanovich, and Greg Carroll, where we're here to provide you insights on the stock market, markets in general, planning, taxes, and much more. Here we are today is December 19th, and yesterday we had quite the day. The market took a major plunge. Well, we actually were talking here earlier this morning that, yes, the Dow is down about 1,000 points, which seems like a lot, but when you think about it in perspective, based on the percentage, it's not as much as you think. If you think back, 100-point move back in the day used to be a big move, but yes, the market did move. Over the last week, since last week, I was looking at the numbers, and the Dow Jones was down almost 5% since last week, and the S&P 500 was down about a little over 4.5%, and the Russell 2000, which is more small cap stocks, was down almost 8%, and that was as of yesterday's close. The market's back up a little bit today, recovering, but there has definitely been some movement. The Fed came out and lowered rates by 25 basis points, which we expected, but I don't think it priced in the expectation that for next year there'd only be 2 changes. But that was kind of interesting. I was a little surprised that we saw so much movement, but anything can happen in the markets.
Yeah, well, I think it was a bad 2.5 hours yesterday. Once Jerome Powell, the Federal Reserve president, or whatever he's called, said that we probably aren't going to lower rates anymore, at least for the time being. And for the next 2 years, it sounded like he thought that it's going to be higher inflation and maybe not as well, actually more economic expectations. So it looks as if that the rate cuts have been cut short.
Yeah, he kind of apparently contradicted his rate cut in his speech by saying inflation is stickier and going to be higher, yet he lowered interest rates as if those were going to be lower next year. So
you obviously do not understand how government works.
Clearly.
So speaking of government, and then that's now on the horizon, is there going to be a government shutdown? And that's been a hot topic as well. I was kind of looking back at the last time we had the shutdown, which was December 22nd of 2018 through January 25th of 2019 for 34 days. And during that shutdown, it led to about a $3 billion, taken out of the economy based on that shutdown. So it'd be interesting to see. I know it's kind of a hot topic right now if that happens or not.
Well, all I know is that the Fed said it's been targeting 2% inflation, and I can tell you that my grocery bills apparently haven't gotten that memo.
Well, I think it's interesting too that regarding the government shutdown, we have this debt ceiling, which when we can't come to an agreement to raise a debt ceiling, yet they've never not raised the debt ceiling.
Well, they're supposed to have this debt plan, or I should say the budget plan, done in October. And every year we wait until it's almost Christmas, and then they do a reconciliation bill. And in that reconciliation bill, they put every crappy pork barrel politic, whatever you call it, in that, okay?
Right.
And all of a sudden, what goes from being a balanced budget goes to being so unbalanced that it's crazy.
Right.
And that's what's happening right now.
So do you think they should get rid of the debt ceiling, like some are suggesting?
Well, it's meaningless.
It is meaningless.
Because they just raise it.
Right.
So what I think they should do
So what's the point?
You're right. I think what they should do is actually cut government. I really do. I mean, you can't, we talk about this every single week. Sorry. But you just can't keep doing this. I mean, the deficit is so big. I saw it on Tinder, advertised as 6'2", financially secure and loves to spend lavishly.
Which way are you swiping?
At any rate, I mean, you just can't keep doing that.
Right.
So now we have a reconciliation bill that they wanted to do before Christmas because everybody wants to get home for Christmas. Well, darn it, do this in October.
Right.
Yes, please, because otherwise it pushes tax season out and we don't get our tax forms until mid-February.
Well, I think was it last year or the year before that the forms didn't even come out, or you didn't even know until after April 15th?
I think it was 3 years ago. The forms didn't even come out until mid-February, and it puts everyone in a bad position because we can't do any planning.
Right.
People's refunds get delayed, and it stalls everything.
Right.
So
but the biggest thing is that they put these pork barrel
earmarks
into the bill. And I mean, if you would take those out one by one and tell the tax-paying public what they're paying for, most people would just say, "Are you kidding me?" But they do it, and they do it on both sides, because one says, "Well, if you vote for mine, I'll vote for yours." Right. And so they bring all this stuff back to their constituency, and I guess they're doing something they think for their own constituency, but it's bad for the country. It really is.
Yeah.
It's bad for taxpayers, especially, I'm just saying, because what I've noticed is they throw in weird tax laws at the last minute, and then they make them retroactive back to the beginning of the year, and it's something you just can't plan for.
And I say we're still dealing with the Secure Act of 2.0 and trying to see those changes, and then guidance comes out middle of the year.
I've got a great article that came out today that says IRS pushes back deadlines and proposed RMD regs, but you read the article and it tells you nothing. Yeah. So what's happening with RMD is required minimum distributions. How much money do you have to take out of your individual retirement arrangements or IRAs? It's so confusing. How can you plan for that?
What do you think they're referring to at this point? I mean, they had a lot of changes the last couple of years.
Absolutely. Over the past 3 years, they keep changing the age at which you have to take money out of your individual retirement arrangement IRA.
And then also when you inherit.
They just keep changing the rules. And so the regulations, or regs, as we were talking about, basically that's the clarifying rule. So Congress comes out with, okay, this is what the law says, but it's not clear at all. And so then the IRS has to publish regulations saying, okay, this is how you actually interpret that law. And so we're still trying to figure out, if you inherit an individual retirement arrangement IRA, when do I have to take that money out?
And it varies if you're a minor or not. I know,
there's
earlier
3
this year
different kinds of beneficiaries.
Yeah. I thought they kind of nailed that down, though. That's still up in
they
there.
did, but then now
Apparently
this new thing just came out yesterday that we need to go through and make sure, how does this tie into anything that we're doing. But anyway, there's always something out there.
Yes.
So
3.0 is coming down the road, too.
Oh, goodness, please, no.
Please,
well,
exactly.
with the new administration, I'll almost guarantee. I'm not supposed to guarantee anything, but
you can guarantee this, though.
Yeah.
Can you guarantee the tax rates will go down?
Absolutely not. You can't guarantee anything about the tax code, except there will be an exception to the exception.
The one thing I can guarantee about taxes is that they change about every other year.
Every other minute.
Yeah. So it does make it very hard to plan.
It does.
And that's the real problem with this. And it seems like with every administration that comes in, it goes one way, then it goes another, then it goes another. I would love, of course, I have talked about this before, the old postcard thing where, you make money, hey, 10% off the top, that's it, we're done, move on.
Yeah, they simplified the Form 1040 a few years ago, the postcard idea, and they added 6 schedules to make it simple. I still don't understand, but what a lot of people are really talking about right now is the Tax Cuts and Jobs Act, which was enacted in 2017, at the end of 2017, and many of the provisions will be expiring at the end of 2025. So big question is, what are they going to keep and what are they going to eliminate? So we shall see.
Well, it'll be interesting because you hear a lot right now with Elon Musk and Vivek Ramaswamy, and they're supposedly going to help cut things out of the government that are waste. But I'll tell you what, that stuff is so entrenched that I just, no matter who it is, I'm not sure that they can do it. Our government usually works in emergency situations.
Yes.
So we wait until there's an emergency and then we do something about it. I'm not sure if $35 trillion in debt is an emergency. I think it is, but when people start going broke and companies start going broke and our country starts going downhill with our economy, that's when they'll take care of it. I don't know when that's going to be, but at the rate we're going, it's going to happen. I hate to say that.
It's going to take hard decisions, and usually that's political suicide. So a lot of politicians don't do that, but maybe with some people that aren't so politically motivated, maybe they make some changes, the hard ones, that actually might help us out longer term.
Well, if you think that they can talk about Social Security and or Medicare and do anything with it, forget it. I mean, even Trump said we're not doing anything with that. And supposedly he's this tax cutter. I'm not sure that that's true.
Well, they need to do something about Social Security. and Medicare, but I think more importantly, Social Security. I mean, it's going to be, pretty much insolvent in less than 10 years.
Yeah, and I wonder how much further along Medicare will be insolvent, because those costs are going up astronomically.
Yeah.
And there's just not enough people to pay for them. This is a whole different conversation about,
Yes.
we've talked about it a few times, peripherally. But again, I don't think I'm smart enough or know enough to be able to figure that one out. But there are people who do this for a living who hopefully should be able to figure it out.
You're not silly enough to go there to Washington and try and figure it out, are you?
That's right.
So speaking of Medicare, just really briefly, since we are at the end of the tax year, and a lot of people are wondering, how can I save money on my taxes? Medical expenses is an item that people constantly are asking me, how can I write off my medical expenses? And it is oftentimes very difficult to do so. So you may consider a strategy called bunching your deductions. So if you have had a year where you've had a lot of medical expenses, you may consider, what can I still do in 2024? Go get your eyes checked, get a new pair of glasses, go get the massage, the prescribed massage, or go see your dentist before the end of the year. So you can bunch all those deductions into 1 year. Or
I can deduct massages?
if they're prescribed by your doctor, absolutely, yes. And
Okay.
chiropractic and many other things. If you have to install a shower bar in your bathroom because you need to be safe in the shower, or if you need to put one of those fun chairs that goes from the bottom of the stairs up to the top, if it's medically necessary, then you absolutely can deduct those
But
costs.
don't you have to have a certain amount of deductions?
Yes, that is absolutely true. So in order to deduct your medical expenses, it has to exceed 7.5% of your adjusted gross income. But maybe you're having a year where your income is maybe a little bit lower.
Geez, how many massages can I get to get it up to 7.5%?
Ask your doctor. But it's definitely the time of year to be thinking about getting your records in order and getting ready for tax season, because hopefully they're going to open up tax season mid-January. We've already heard business returns can be filed as of January 15th. They have not announced yet the day that you can file your individual return, though. So we'll see.
As you were talking about salaries, I came across an article from Think Advisor called How Americans Define Financial Success. And basically, they did a survey, and on average, $270,000 a year and $5.3 million in overall net worth is they consider successful based on this survey done by Empower. And Generation Z, though, views salary at $587,000 approximately and a net worth of $9.5 million as successful, whereas baby boomers say it's a salary of $99,874 and a net worth of $1.1 million. So that was kind of interesting, the perspective of the different ages and how they see value in money and their perspective. The other thing.
Well, wait, when you're talking about that, the salary of $430,000 a year as of, I believe it's this year or last year, was the top 1%. So they're talking about, to be in the top 1/2 of 1%.
Yeah.
And you don't need to be there to be successful, I don't think.
No, I just think it's kind of interesting, the perspective and money. Things cost a lot of money, but I think if you almost make $600,000 a year, you
have a lot of lofty goals.
Yeah.
Holy cow.
And then it says also that it's about discipline, smart money choices, and one of the other thing that it said about achieving success is having a plan, building up retirement plans, investing in stocks or top money moves that respondents said contributed to success. That was kind of interesting when you kind of talking about salaries and different perspectives about money. But I know it costs a lot more to live these days, depending on where you live. But I definitely feel that's on the higher end of.
I wonder if it's all the social media like TikTok and
I know.
everything that these younger generations are looking at, and you just do some dances and everybody views you, and apparently you make millions of dollars. So they think it's very simple sometimes.
Or it's a matter of they're getting lots of money from their baby boomer parents and
There you go.
grandparents.
Oh, there you go.
I was just going to talk about annual exclusions, and it is the end of the year, and a lot of people want to give gifts. And so therefore, if you are thinking about giving a gift, keep in mind that the annual tax exclusion amount for 2024 is $18,000 per donee, and if you're married, $36,000. So if you do want to give a larger gift, consider giving a little bit at the very end in December, and then the remainder in January, so you don't have to file a gift tax return. But if you do give that $18,000 figure, then you don't have to file any paperwork.
But you can give bigger, as we've talked about.
You absolutely can. Yes.
And you do have to file a gift return, and but it comes off of your lifetime exclusion.
Correct. Yes.
But again, that's the problem, because right now that lifetime exclusion could go way down. Am I right?
It could absolutely go way down. I did read something that Trump indicated he'll seek an extension of the current high exemptions within his first 100 days in office.
Well, I think he wants to make it permanent,
I've heard that as well.
which, in my opinion, would be good, especially for people like farmers, who when they inherit all that
Land.
and property, they can't afford to pay the taxes.
Yeah.
I think that's a little bit ridiculous.
No.
So it does make
Because
some
what is
sense.
it, 13 million roughly?
13.61 million
per
per
individual?
individual, so
Yeah.
27.22 million for a
Yeah.
couple. Set to increase to 13.9 million next year.
And if that sunsets, it goes back to what, 5 point?
Index for
Two or-
inflation.
So what is
So
it, 5.5?
maybe 7. It's between 6 and 7. Yeah.
Okay. So if under that plan, if someone were to die, the two parents die, the people who inherit it can get up to that, whatever it is, $6 or $7 million
The lifetime
tax free.
Yes.
But anything over that, they're paying what, 50%?
Pretty much. Yeah.
Yeah.
The rates it accelerates very quickly.
And especially in California, it's not that hard to get there because a lot of houses are worth $2 and $3 million around here. That, forget the rest of the estate.
Absolutely.
So that may be okay.
Again, it may be time to give a gift, and do some planning. Because if you do give away that $18,000, which is the annual exclusion, that's not counted as part of your taxable estate. Whereas when you give a gift that's over the annual exclusion amount, that does get subtracted from the lifetime exemption.
Are there limitations as who you can gift to and still?
It can be any one individual.
Anyone,
per
anywhere?
year. You can
All right,
find somebody on
I-
the street.
Can I give my phone number and my address?
I'm accepting gifts.
Yeah.
Although we have
It just
limits with
can't-
the SEC
it just
rules.
can't- it just can't be from
The rules are going to
Yeah, the
follow,
rules.
Steve.
It just can't be from our clients. So anyone who's not
Exactly.
a client out there, Steve Wolf, WWM Financial. I'm accepting all gifts. I will help you out with your tax returns. All I know is that, I've tried to be like the government and, be responsible with my money. Now I'm in debt and I'm blaming my kids. Don't we love the government? Come on.
Yes.
We really do. All right. What else do we want to talk about? Oh, I know what I want to talk about. Fear and Greed Index. Interestingly, I looked at it this morning and we're at 28. Now, 25 is extreme greed. I'm sorry, extreme fear. Low end is fear. And it's at 28. So we've gone from almost extreme greed to extreme fear in a matter of a month, would you say?
Short period of time.
But it really
Like a week.
took place yesterday.
Yeah, a lot yesterday, but last
Yeah,
week.
Yeah.
Right, and I talk about this all the time, but let me read about what CNN says is the Fear and Greed Index, so you really know what I'm talking about. And I'm going to read here. The Fear and Greed Index is a way to gauge stock market movements and whether stocks are fairly priced. The theory is based on the logic that excessive fear tends to drive down share prices and too much greed tends to have the opposite effect. So how do they calculate it? The Fear and Greed Index is a compilation of 7 different indicators that measure some aspect of stock market behavior. They are momentum, stock price strength, stock price breadth, put and call options, junk bond demand, market volatility, and safe haven demand. The index tracks how much these individual indicators deviate from their averages compared to how much they normally diverge. The index gives each indicator equal weighting in calculating a score from 0 to 100, with 100 representing maximum greediness and 0 signaling maximum fear. Now, at another time, we'll go over what all those mean, but it's not just a number. It's a compilation of 7 different indicators. And, it's interesting because, everyone got really scared apparently yesterday. I was out playing golf. Thank goodness I didn't happen to see it. I was actually working, playing golf with clients.
Working.
Air quotes.
Kind of. And afterwards I said, so what happened to the market? And I looked at it, and then I read all the stories. It's fun to read about what you haven't seen. And it looked like the world was coming to an end. And although 1,000 points is a lot, I believe it was only like 2 or 2.5%. Yeah. Only. It's a lot in one day, but still, 1,000 points. I know when I started let's see, when I started this business in 86.
It was below 1,000, wasn't it?
Well, the S&P definitely was. I'm trying to think of where, what?
The Dow might have been.
I think the Dow was too.
About 1,000 when you started.
Right. So we would have been completely wiped out in those
gone.
One day.
Done.
But today, the Dow is at 40,000 or somewhere near there. So it's not as bad as you think. So my point was going to be that instead of freaking out about how it's going down, okay, you should actually be licking your chops if you want to buy something. Because a lot of these things that were more expensive are now starting to come down in price. Still good companies representing better value than they were just a day ago. Now, do I think there's going to be more downturn? There probably will, and I'm thoroughly expecting a 10 to 15% correction sometime, probably in the beginning of the year, because I think a lot of the people who want to sell haven't sold because of taxes. So It wouldn't surprise me if in January all of a sudden you see this whoosh, down, how about a whoosh down? That sounds better. And then everyone will get freaked out, but don't do that. If you've got some cash, that's a time you should be licking your chops. If you don't have cash, don't panic. Okay, it's the worst thing you can do. Don't panic.
Yeah, Jerome Powell said the economy is good. Mm-hmm. It is strong.
Right.
They just didn't like to hear we're not lowering rates, because lower rates is usually better for the stock market and speculation.
And in the words of President Biden, don't.
Don't.
Just don't. I'm not sure exactly what we're referring to, but just don't.
Okay, I'm serious.
Okay, especially when you're panicking. Seriously.
No kidding.
So a couple other loose ends before we wrap up are if you have to make any contributions to your retirement accounts, this is it, or the last final stretch for salary deferrals. We've actually had a few new clients that needed some solo 401ks we've been working on before the end of the year. Also, if you have some accounts, obviously our clients work with us. Occasionally there might be some investments or things that we're not managing, or they want us to start helping consolidate. That's something we've been working on with a lot of our newer clients, is helping them consolidate and organize. So if there's something out there that you want us to look at, let us know. Obviously making sure everything's titled and set up properly. We're happy to look at that with you. And then as we're kind of wrapping up here, we will not be doing a podcast next week, which is December 26th, but we'll be returning the following week. And so we just want to make sure everyone enjoys the holidays and whatever you celebrate. And we're just so thankful to be a part of your lives. And thanks for listening over this last year with us.
Yeah, so the next time we talk, Christmas will have gone and New Year's will have gone.
Yes, and I think Hanukkah this year is on the 25th.
Yes, as I call it now, Christmaka this year. I think it's in the same time. So anything else to add? All right, well, listen, we hope you all have a great Christmas, a great Hanukkah, a great whatever you celebrate. We hope your new year is going to be fantastic. We hope for another great year in the market. We've had 2 good years in a row. Don't be too surprised if, at least in the beginning, it's not that great. But I think it'll end up being okay. I really do. So from all of us to all of you, have a great next couple of weeks. And we'll see you the January the 2nd. All right, take care. Thanks a lot.
Thanks.
Bye.
Please stay tuned for important regulatory disclosures. WWM Financial is an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry and how we may be able to assist. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. As always, please remember, investing involves risk and possible loss of principal capital. Tax considerations presented may not be appropriate for every individual circumstance, A tax professional should be consulted before making any decisions about your tax liability.